The federal government of Nigeria has been actively pursuing economic reforms aimed at improving the business environment and fostering sustainable growth. Notably, among these reforms, one of it is the removal of subsidy, another is foreign exchange liberalization, and of course, tax harmonization, which government says it will be instrumental in addressing various challenges that has hindered the country's economic development. Meanwhile, some experts, on the other hand, say government must find a way to translate the benefits of these reforms into welfare improvements for citizens and domestic business environment. Let's get a broader view of this. And I'm being joined today by the president of the Lagos Chamber of Commerce and Industry, Mr. Gabriel Idahosa. Thank you so much, President LCCI. It's good to have you on the show.
Thank you. Thank you very much.
And happy Ramadan celebrations.
Thank you.
Yes. Well, let's get to business. I know a lot has been happening since you took over as president of LCCI. Reports and we've been seeing press releases, press statements from LCCI reacting to every move by government. Now, I want us to start this way. Make us understand the impact of some of these reforms on the entire business community. Just recently, hiking electricity tariff is what we've seen for Band A customers, which is, of course, we've already getting reactions in regards to that. The foreign exchange market seems to be stabilizing at the moment. A dollar is exchanging for 1,100 in some cases. But let's put all of this together. How has it impacted the business community, which you deal with directly?
Well, each of the policy reforms have their impact, whether it's the removal of fuel subsidy, the conversions of the foreign currency, and then specific removals of various charges like or removal of subsidies in areas like power that we are beginning to see. Across the board, the impact is usually to increase the cost of doing business, whether it is the PMS, the petrol that was used by the drivers and the vehicles that all our businesses use, or the generators that are also used by some of the companies and are fueled by petrol. Of course, the foreign exchange free fall of the naira for quite a while was pretty serious. The impact was very, very serious. We had most companies, large and small, declaring very huge losses. In the case of the large companies, they were reporting losses in the billions, and smaller companies were reporting losses in millions. So that's what the direct impacts on our businesses. Across the board, the intention is understood. We know that it will take some time for the benefits to start to flow in. We are beginning to see the benefits in the foreign exchange markets. We are beginning to see the benefits in the public transportation space. In states like Ogun, Edo, Borno, Adamawa, those states that have brought on CNG buses to the road have seen commuter transport costs come down very significant, in some cases lower than before the fuel removal. So it's a mixed impact. Some of the impact was very harsh at the beginning, but is beginning to ease off. We are beginning to see improvement in transportation costs coming down, the exchange rate coming down from its all-time high. So that's how business is navigating it. Particularly in the case of exchange rates, the custom duty conversion rate that was adopted seriously affected anybody that was importing anything, whether for sales as an importer or for raw materials as members in factories and construction, because a lot of the items required in those industries are imported. So we have seen massive escalation of costs in some sectors of the economy, but we are beginning to see the benefits of those policy reforms. It's early days in terms of the benefits. We all expected that it would take about 1 year, between 9 months or 1 year, for us to see those benefits. So we are hopeful that the benefits become to flow in and reduce the costs and losses that most businesses have carried in the first 9 months of the new administration.
Now, the central bank has come up to say, well, its focus will be monetary policy, of course, addressing, getting strength, more strength for the naira. We've seen activities going on at that end, sorting out confirmed debts according to them. But on the other side, trying to rein in on inflation, we see that the rates are up 24.75% at the moment. I'm sure the LCCI reacted to this. I'd like to ask you what you think this means for the entire real sector.
Well, clearly the CBN is aware. We cannot pretend that the CBN is not aware of the impact of the very, very high NPR and interest rates. It means that all businesses, all businesses, whether you were even a school, a secondary school, borrowing money to run your school, everybody are carrying much higher borrowing costs. And what that means is that growth is suffering. Most businesses cannot expand by way of borrowing to expand. Their cost of operations have gone very, very higher. So that's a big price that, as you mentioned, the LCCI had made a statement on it. There's a serious concern that we are achieving some success at the expense of the growth of the economy. We are beginning to see stabilization in exchange rates. We are probably going to see lower costs in transportation and some other areas. We probably will see some lower costs in custom duty rates. Hopefully that will reduce the inflation rate. But the cost of borrowing is quite high. And everyone in the economy, including LCCI, has said so. And the hope is that once the central bank sees that it has achieved the main objective of stabilizing the foreign exchange rates, it will begin to slowly reduce the MPR. That's the hope we have. We are fully confident that CBN is aware of the impact on growth that this policy of the very high MPRs are causing. But clearly the CBN has decided to take a decision to pay the price of temporary growth impacted by the high NPR, but ensure that we achieve success is one of the three key monetary policy targets, which is the reduction and stabilization of the exchange rate. Because CBN cannot fight three battles at the same time: interest rates, exchange rates, and inflation. There's no magic in monetary policy that enables any central bank to fight those three targets at the same time. So CBN has decided to just take the foreign exchange rate as the number one priority, bring it down as much as possible, stabilize it, and then begin to look at reduction of interest rates in the hope that those two achievements will begin to bring down inflation. If we can bring down the exchange rates, obviously as we bring down the exchange rates, we are removing one of the inflation drivers, because one of the inflation drivers is the high cost of dollar spent on importing all the products that are consumed or produced in the country. So indirectly, CBN is in the medium and long term trying to fight inflation by reducing the very high exchange rates, then stabilizing it, then go back to begin to gradually reduce interest rates. That is, from what we see, that seems to be the game plan that the central bank is playing.
The bank is also targeting a $1 trillion economy, which many say that's the way to go. And part of the efforts of the way to achieve this is, of course, to recapitalize the banks, which is what the central bank governor has also thrown out. The banks must start to rework their capital and all of that. I don't know how this comes to you and how you react to this, considering the fact that rating agencies are still saying Nigerian banks are fairly stable and stabilized.
Yes, the banks are stable, and there is no real threat on the banks as they are now. But the banks, in terms of their capital base, are not big enough for the economy of the future for Nigeria. So if we are targeting the $1 trillion economy, then our banks must look like the banks that operate in a $1 trillion economy. They have to be much bigger in terms of their balance sheet, their core balance sheet elements than what they are now. So whether or not the CBN announced this increase in capitalization was just a matter of time. It was not a matter of when, if. It was certainly a matter of when CBN was going to do it. Every observer of the economy agreed that our bank sizes are too small for the largest economy in Africa that is aspiring to be one of the top 10 or one of the top 20 economies in the world. All the banks in Nigeria put together, it's not up to the largest bank in South Africa. So that just gives you a sense of where we are in terms of our bank sizes. So, and there's no really perfect time to call for this capitalization. You have to call it when you know you have to call it. Obviously, the former CBN governor had too many issues on his plate to think about this. But now that the new governor has stabilized various factors playing in the monetary space, it's definitely the right time to do it. And there are 2 years for all of this to happen. So some banks have already met targets, so they have no issues. The banks that need to meet target have options. Definitely, some of them will think of going to the capital markets to raise more money. Some are the very lowest ranks of banks today will perhaps be thinking of mergers with their peers, so that we have 3 or 4 small banks coming together in order to meet the target. But there's no fear really that as a system, as an industry, the banking industry will certainly meet the recapitalization target.
Now, let me ask you this question directly now, President LCCI, Mr. Kribali Dahosa. What sort of support would business owners want at this time from government? Already, we talked about the tariff, electricity tariff, which is up about 300%. Some have made projections. This would definitely affect bottom line, even for private business owners. Now, what sort of support are we looking at going forward that will help complement some of these shortfalls that everyone is facing one way or the other?
Well, essentially, what the business community has been saying is that we fully support these policy reforms that are intended to build a much more robust, a much more competitive, a much more contemporary national economy that behaves like other economies in the top 20 or thereabouts. So we agree with that, but we also believe that there is a time frame to achieve all of that. We remove fuel subsidy, we remove foreign exchange, multiple exchange rates. We are now removing all the subsidies for energy supply, all at the same time. So government is certainly hearing us. We are saying to government, let us space out these reforms. Let us consolidate on one or two of them and then move on to others. In the case of the tariff, they wanted to do it last year. By the last quarter of last year, there was an outcry that it was too early. We were still trying to deal with the fuel subsidy removal and the exchange rate convergence. And government said, okay, we'll move it to next year. But come next year, they are doing it in the first quarter. A lot of people believe that they could have left it to maybe the third quarter, so that we have about 1 year from May last year to absorb the shocks of fuel subsidy and foreign currency convergence. But the government is clearly in a hurry to move faster. So what we are saying to government is, let's have, at least we have a 4-year plan for this government now. Let's space out some of these reforms that have serious negative impacts on the operating environment, and then take them one after the other. In the case of the tariff, we believe that the government should still subsidize, as it has been doing, the tariff system, and rather than have 200% increase from where we were, a government can say, okay, now we will do 50 or 100%, or maybe 50%, then after 2 quarters we do another 50% increase. That is the kind of support we're asking for government, to calibrate the introduction of policy reforms that have very strong negative impacts on business community. Calibrate them and allow business community to absorb them one after the other. We all know, have a general idea of the end game, where we want to be, but we need to reduce the frequency of introduction of these policies.
Very interesting one. Before I let you go, what about subnationals now? Everyone is also talking about states. States need to also make their locality, more business friendly. The environment should be more conducive to run businesses. How well are you assessing state governments supporting the ease of doing business initiative of government?
Well, in all our statements, we have always emphasized that this is not, turning the economy around is not a federal government project.
Good.
It's a project for everyone, the federal government, the state governments, the local governments, community leadership, and then the business sector. Clearly, the states, especially here in Lagos, we are very close to the state government. We are in constant conversation and a lot of conversations and interventions. And we do know that certainly Lagos State is listening and doing a lot of things in the direction of easing business environment for Lagos. But we cannot say the same thing for several other states to the extent that they are listening to the business community in those states. But we are quite satisfied with the degree of engagement in Lagos, and we think that that is what it should be. For many reasons, Lagos is the largest economy in Nigeria. It has always been run by people who have a strong business background. So communication between the LCCI and Lagos State government has been very, very productive in all these years that I've been in the LCCI.
Great stuff. I must thank you so much, President, Lagos Chamber of Commerce and Industry, Mr. Gabriel Idahosa, for your contributions to the program today. We appreciate this. Do enjoy your holidays.
Thank you.
Well, interesting conversation indeed. But let's move